So the Elliott wave consists of a total of 5 waves. This is wave 1, a pullback for wave 2, then it rises again for wave 3, another pullback for wave 4, and rises again for wave 5. After wave 5, there are 1, 2, 3 corrective waves. Up to here, then we have the corrective waves A, B, C, and this is a double top, right? The last wave C is the low point of wave A. If it breaks below here, it's a break. If it holds support here, it becomes a large wave 1 that can go further. Wave C should not break below. If it breaks below, cut losses, and if it rises, re-enter à nouveau. Understand? Elliott wave 3 is key. Here's a quiz. If it breaks below, it means it's going down. So, for those who are in it for the mid to long term, you need to endure the A wave, B wave, and C wave that come out here. If you hold on and it doesn't break below, another wave of this size will appear. That's the basic principle of Elliott wave. Do you understand now? It works, but there's a continuous downward wave. Where does the Elliott wave start, and where should we consider the first wave? So I have set a standard for you. It becomes the first wave when it breaks above the 112-day, the 224-day, or 448-day moving average, which are lines representing more than 6 months. I'm to put, okay? If it strongly breaks through one of these 3 lines, then you can say the first wave is starting. I see it that way if it breaks through strongly. If it breaks through weakly or just barely breaks the 200-day line and stays inside the box, then it's not. For example, how strongly should it break through? When you look at the 224-day line, if it's below it, and it doesn't just slightly break through, but breaks through the box, then right before it used the 224-day line, there's this much gap. It needs to break through more than twice this gap. It needs to break through more than twice here. So when the retracement comes out halfway, the likelihood of support increases. So the gap above here needs to be more than twice the size of the wave right before the break. That's the strength. The more it widens, the easier it is for it to trend upwards. That's the first wave. If it only goes up this much, I don't consider it a wave. If it goes up slightly, I don't consider it a wave. If it goes up slightly, you need to wait here. Wait for a sufficient correction, and then when it hits, that's the first wave. Of course, it's better if the trading volume surges here. If the trading volume doesn't surge, then it lacks strength. For the first wave to succeed, if it breaks the 224-day line, it's best if it supports it. Otherwise, even if the market isn't good and it drops 20 points, it should recover within a few days. Since it's a moving wave, it might dip a bit more or be a bit more resilient. Search for Stock Darren Union on Nava. Now let's take a look at Mom's Touch. Do we consider this as Elliott wave 1? Yes, we do. Why? Because it's not only trapped within a box range, but it also came out smaller than the rise below it. If it had broken through overall, it should have completely broken this box range. If you look at it this way, this is wave 1, right? So you shouldn't consider this as an Elliott wave, it's just a box range, clearly broken through here. Wave 1, wave 2 pulls back, and then wave 3 happens like this. Based on the 224 moving average, if it breaks through and rises by this distance, it becomes an upward trend, but it doesn't break through. So they decided to create a new box and continued this wave. It converges and breaks through the previous wave. This is wave 1. I look at all these things, observing the trend as it goes. Okay,